Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. Welcome to Tuesday Market Pulse. Hope everybody had a great weekend. Coming into a holiday week. We have Labor Day coming up. We have non-farm payrolls. And that's probably going to be the big mover. Obviously, last week we had the Fed, as we already discussed on Friday's show. So let's move forward. So we've had some momentum early today. So let's review some of the things we talked about on Friday. So we talked about the bond market not really doing anything, and it's still not doing a whole lot. To be, it did sell off a little bit, but even today, it very, very flat. We did have rollover on the bond futures contract. So, and today was very, very flat. I think, again, the market is still trying to digest what's going on with the Fed. Still, a lot of algos pushing the market around. But so where do we go from here? So Friday, we mentioned the 4,000 level. By the way, type in the chat if you guys can see me and hear me okay. All right. I know this is probably going to be the slowest week as everybody kind of winds down their summer vacation and so forth, right? Everybody going back to school. So, okay, Dennis. So, yeah, we came off obviously very sharply off of some of the distribution levels from Friday, from last week. We again kind of been harping on everybody getting super bullish, and now that kind of complacency from 2-3 weeks ago when everybody was starting to turn bullish and so forth. Now that's obviously come off as we've had some pretty good selling. So we did get a bounce off that 4131 area, that 4100 that I mentioned the other day. Looking at that gap, I think I mentioned we didn't kind of worked around that gap. And now clearly yesterday we sold off, Friday we sold off. And today we're trying to bounce again off another level. So it's almost like, you get this momentum, this strong momentum shift. And then all of a sudden, you come into some accumulation and then we're getting a bounce. So today early, we got some momentum and we're actually trying to bounce off the 3961 level, which by the way, coincides to a much bigger daily accumulation. So what the market's been kind of doing, Dennis. What the market's been doing is it's been, having some momentum, and then right at these really higher time frame accumulation, the market stops, tries to get a bounce, and then kind of pauses, and then maybe goes, the question again, is it just going to keep doing that with a thin volume? And really, again, you can attribute this to the thin volume. And so this morning, once the algos kick in, you can see the momentum kicking in. And then when some of the bigger volume comes in, then you kind of just bounce around these levels. So as we come in, you can see we're actually trying to bounce off. If you look at a 4-hour chart and draw it, you'll see a very clean level, 3961.75, 3950. We're getting a little bit of bounce off that. And we still probably need the bonds to do something, whether, again, if bonds, looking at the 10-year holding around 117 still, it's been there like 3 days now. After rollover, just cannot get any kind of movement in the bond market. And again, I suspect we're probably going to have to wait for the non-farm payrolls on Friday that's early Friday to really get the bond market moving. But you never know. There's all kinds of stuff stirring under the surface right now. I think you guys heard about the Chinese and Taiwan situation. and that kind of stuff. So that could be and I still think there's hurricane season coming up as well that could really hit some of the maybe oil or nat gas as well. But even that, oil has been basically just, again, these massive swings, very price sensitive to news and so forth. So we'll see how that goes. And still oil is probably the number one inflation proxy out there. So we'll have to see what happens there. Okay. So in a nutshell, to sum it up, clearly the sellers are gaining traction in the S&P and the NASDAQ. One of the things that I kind of was a good tell as to when the market was topping, again, one of the things that you have to start doing is tracking what we're doing here, right? Yeah, exactly, Dennis. Yeah, and obviously hurricane season is upon us. It is it a run of the mill? Is it a to what the different degrees or whatever that's going to disrupt maybe some stuff in the Gulf with oil and the rigs and that really what it is. So is it a Cat 3? Is it if it's just nothing, then it doesn't mean anything. It's only the disruption that really is going to be material to the move in oil. And in fact, oil got hit really hard today, right? So going forward, one of the things that I will be watching very carefully is one of the really good kind of guideposts to watch now as the market continues to falter here is the VIX, right? I made mention of the VIX under 20. I was warning everybody, be careful up here. Don't chase this rally. Buy puts, sell calls against your position, so on and so forth. We have now we're in the mid 25s in the VIX. In fact, the VIX closed right around 26. So we've had a pretty nice jump in the VIX, again, signaling that maybe institutions are starting to, hedge a lot more. So we'll have to see. And I would say, barring a black swan, i.e., God forbid something in Europe, with Ukraine and Russia got ugly, where I'm going with this, maybe something aside from just conventional weapons, if you get my meaning, which, who knows, right? And these days, or this China, Taiwan situation flares up, then you could see the VIX, really spike probably over 40. But if it's just, again, focus on the VIX chart, and you can clearly see in the last 6-7 months, it's been in a range. Anytime it rallies up to about the 35 to 40, in fact, it's been topping around 36, 37. Watch that. If we continue to sell off, and that would be our clue, and obviously if that corresponded with some lower level accumulation areas, daily, weekly accumulation areas, that would be an excellent buy signal, right? From a longer term perspective. In the meantime, are we gonna get these little bounces like we have in the last 3 days? We had that initial sell off. We had a bounce off 41.31. That was about a 50-point bounce. We got a bounce off of the 4,000 accumulation. That was about also about a 60, 70-point bounce. But clearly, the momentum still is on the downside. There are some lower levels I'm looking at now. I'm going to do a class, by the way, so just let me promote a couple things. I am still offering the 5 free. Actually, I have some people taking advantage of that. 5 free sessions with me in the morning. Basically, we call that M3 market methodologies first thing in the morning. So I'm offering that, and I'm having a class on Thursday, which is really pertinent to what what I was going to talk about here is anticipation of trend, right? So now that we have all the selling here, uh, now what happens is all the selling creates distribution levels to short against, right? And so we have some distribution levels now to short against. There's the 4100. There's a, if you again look at your 4-hour chart, you can see that there was a pause on the way down. There's still a gap way up above, and then some new levels have just newly formed in the last 3-4 hours, right? No, Robert, that is a. I'm going to have another options class coming up, but no, that's basically a chart class. So I'm going to go through a bunch of charts and talk about how to best anticipate a trend. So you have like people, trend followers, right? Which basically have to wait for things to turn around and say, okay, now the trend is in place, whatever. Which is fine, but what I see too often is you chase the trend. In other words, right, by the time you have a very strong trend established, it's almost kind of late to the party, and then the trend reverses. So I'm going to talk about in the class. I'm going to talk about how to anticipate that. Does that make sense, Robert? So if you haven't signed up, if you're interested in that, obviously that's a key piece, because if you think about it. I don't want to steal the thunder for the class. I'm gonna actually take we're gonna take the gloves off on the class on a bunch of stuff, conventional thinking. You know how I am, right? Yeah, I'm gonna take the gloves off. Some people may actually, where I'm going with this, right, Dennis? So we'll check it out. So if you're interested, it's free. That's gonna be coming up on Thursday. Okay, so sign up for the class if you're interested in that. Okay. All right. So we do have now, if you are going to sell some rallies, which is what you want to do, you can sell some breaks too, but that doesn't always work out. In fact, if you try to sell the break this afternoon on the lows, that didn't work out so good for you, right? So you got to wait for some bounces. And again, the one I'm looking at, if you look at a 4-hour chart, you'll right around 4100, you'll see a pretty obvious drop-based drop in there. But again, that's 110 points away. Now, with the volatility the way it is right now, can we get there in a hurry? Absolutely. And we're already trying to bounce off of a couple of levels here. Is it possible to get a bounce? Absolutely. In fact, going into a U.S. holiday, you actually have a bullish type tilt to the market going into a U.S. holiday. What could cause that, by the way? Is there a catalyst coming on Friday that could, in fact, get a massive rally underway? Absolutely, right? The non-farm payrolls. In other words, remember, the good news is bad news for the market, and bad news is good news for the market. So in other words, if we have a very, very low employment number on Friday, below consensus, and the jobless rate increases, that would actually be a good thing, because again, everybody would perceive that maybe that's a data point that the Fed will take a little bit of into account in terms of being so hawkish, like Powell was on Friday, which is caught really the market off sides a little bit, right? Right. So that's actually a good setup, Dennis, right? So if again, recency bias, just like when remember the inflation, that last inflation number, where everybody was so convinced that the inflation was going to be high and that the market was going to keep dropping, we could be setting up for that this time around as well. And there is evidence that the job market is slowing and so forth. So in any event, that's going to be on Friday. I'll be with you guys after that, but keep an eye on that, because I think that would be the catalyst. If you're looking for something that would actually prompt a rally, that may be it. Okay. And the bond market, one of the things also that, is where the algos are running amok right now, is, there's the bond market's not doing anything. So if the bond market were to rally hard as well, I think, that would actually help the stock market. But the fact that it's not doing anything, the bond market is really not doing anything, is a little bit of a, yeah, that's actually a good. I mean, again, it's not good if you own real estate, right, Dennis? But that's actually what the Fed is looking at, right? So, in any event, all right. So to sum it up, you've got 4,100 to short against. We're actually right along that 39.61. Check out your charts. If we drop below, there's a pivot around 3,900. I am actually really, if you go all the way back down to about the 38.50 area, that's like one of my favorite levels right now. So go check it out on your charts, right? 30, right around the 39.50. And then below that, we have some really nice levels in there. Okay. On the NASDAQ, clearly the underperformer. That's actually bouncing off a really nice level, that 12,300. And also very similar, we've got a drop-based drop around the 12,800 area as well to short against if we get a bounce. And then a really nice level right around the 12K as well on the NASDAQ. And the NASDAQ is going to be ultra sensitive to interest rates. So, and Apple, watch Apple too, because Apple's driving a lot of that as well. So Apple, if we're going to test the lows, that probably means that Apple's going to go back to the 130 level. So also track App as a proxy for the NASDAQ. Okay. And Apple, if we take a look at Apple, it was performing really, really well. It peaked right around 175, very close to the all-time highs. And then, we are coming into some, accumulation on Apple, right, by the way, around 155. So check that out, because I think it's, that's also going to be a proxy for the NASDAQ. If Apple can hold 155, that's also going to be important. Okay. All right. So that's that. Russell, I'm still looking at, I think I mentioned this last Tuesday around the 18K level as well. Okay. But we do also have some shorting levels on the Russell as well. So right in this environment, by the way, you can go long and short. If you're going to short because you're convinced that this is still a bear market rally, and clearly the price pattern is clearly showing that the sellers are in control, wait for rallies, right? Don't sell breaks, or don't get caught up in the, wait for some bounces and then get short if that's which I will do if we get a nice strong bounce. That's when you want to be shorting. Breaks can work here, but you got to be careful when you're shorting the breaks. Okay, you know what I mean by shorting the breaks, shorting lows, or some support areas or whatever. That could be also working, but the further down we go, it's going to get a lot tougher to short the breaks. Just like if you were trying to do that at the lows, you basically, that a lot of that didn't work out. Okay, all right. Does that make sense, everybody? Okay. Now so there's really not a lot to talk about in the bond market, so we can kind of skip that. Basically, the only thing I would say there is we had a rollover on the bonds, so now we're trading December bonds. Very choppy, still kind of on a downward path. Yeah, hi Trina. Look at the 10-year and see if we can get above 118. That would be really critical. And I made mention the other day that if there is a possibility, if we break 116 on the 10-year, that we actually go and make a new low in the 10-year, i.e. a new high on the yields, which is 3.5 roughly. Okay. So that's going to be also very, very important for stocks, especially in the NASDAQ. So keep an eye on that. And again, the big catalyst on Friday, right? Catalyst going to come in on Friday, which can change everything. As we know, again, what happened, remember what happened with Friday, with the Jackson Hole speech. Things were looking pretty good. Everybody was super bullish and thought that the market was ready to go up. And there you go. So could be the setup the opposite on Friday, right? Where now everybody's starting to be, bearish again. The VIX at 26. It's still, need the VIX around in the mid 30s to really get me really hyped up about it. And I've been writing about that a month ago. I was telling everybody, the opposite. And you guys know, last 4 weeks I've been actually telling everybody to be careful. So, but that is largely based on where the VIX is. But at extremes, we're kind of in no man's land at 25 at the moment. Correct? All right, now dollar hovering pretty much since we talked last. It did make a new high. The dollar index 109.35, and you can see the dollar has been, for all intents and purposes, consolidating in a big ugly range in the last 4 or 5 trading days. Is it going higher? It will all be predicated on interest rates. If I think one of the things also why dollar can't get moving is because bonds can't get moving. So I think they're all kind of tied together. Remember, dollar index is tied to the interest rate market, to the treasury. So and again, I've been trying to, we've been talking about gold and silver and the currencies. Gold is continuing to sell off largely due to the strength in the dollar, pretty much. Now, I did mention that we are looking at gold. There's some levels in gold coming in here, but here's the thing. For my members, we actually canceled our GLD long until I see what the dollar does, because no matter how good a demand zone looks, or an accumulation, we call it accumulation, if the dollar continues higher, doesn't matter, right? So this is one of the things that I teach people is it's not just about levels. There's location, there's correlation, there's all this stuff. So don't fall into that. And one of the things I'm going to talk about in the class this Thursday is also, important. Location is great because the location also determines how strong a trend is and when it's ready to reverse. So that's going to be, again, anticipating the changes early rather than wait for it like everybody does when it's kind of too late. You can still get momentum, but usually by the time you get that, it gets very tricky. In the middle part of a move is always the tricky part, and that's where most people try to trade, right? In the middle part of the move. And you know how that works. I mean, it's kind of hit and miss, not high probability. Okay. So trying to focus on where the turns are is going to be lower risk, higher probability always. Okay. All right. So not a lot to talk about there. So on gold, again, I have to see what the dollar does. And you're right, Dennis, there is a distribution area in the dollar coming up here. 110. I think I gave you guys this level the other day. Yeah, right around the close to 111. Okay, so you look at your week. You have to look at your weekly and monthly charts to spot that, because you have to go all the way to 2008 to see that level. Okay. No, there's actually a higher level that I'm looking at. So let me wrap up here. I've got 5 minutes. We've got oil all over the place, as you guys know, right? In fact, look at the swings in oil. It looked like it was going to break out yesterday. In fact, it looked pretty strong. And this is, again, one of the cautionary things about this whole thing. If you were looking at that chart, it broke higher highs and all that, and probably got a bunch of people to go long, and look at what it did today. This is one of the perils of this whole thing, right? And it broke down really hard. and it got a nice bounce off a level. And so I'm still bullish on oil longer term, because the bigger trend in oil, if you go to the monthly chart, is still higher. All of this stuff has just been chopping around, and it's very, very price sensitive. It's very sensitive to news. Anything comes out of OPEC, and again, with hurricane season and all that, you can clearly see on the charts these huge moves in oil. Very, very treacherous to be trading that unless you, and the levels aren't that great, by the way, in oil too. I don't know if you've been trying to plot some levels on oil, because what it does is it goes chops, and then all of a sudden it gets a spike, or it gets a move because some news came out of OPEC or whatever. And then, even the move that you see on the charts right now on oil, that happened actually overnight, and it dropped almost what, $5. So you got to be very careful with oil. Take a longer term view. What I would say about oil, still 85 on the lower end, and about 96, 97 I've been talking about. Yeah, Robert. Well, that was a crowded trade. If you have been listening to the pundits, who doesn't love, Exxon or Oxy, or, right? Like, everybody loves oil stocks. And, that happened last go around. Remember, about 3 months ago, and I actually wrote about that in the Sunday newsletter. I don't know if you remember that. If you guys, by the way, if you don't subscribe to my newsletter, there's a link below. Subscribe to it. I was actually talking to people about oil when it was peaking, the oil stocks in particular, right? So, in the last few weeks, everybody is in love with oil stocks, and you can see they got hammered today. And then part of it was with the price of oil as well, getting hit pretty hard. Lastly, nat gas. So nat gas around $10. Thanks, Dennis. You've been tweeting me with the stuff about Germany and all that. My view on nat gas is that because we've been sitting here now for a couple of weeks, I think that nat gas at between 9 and 10 is what I would call fair value or equilibrium. So in other words, a lot of the fundamentals, if you will, of the natural gas market, that's including what's going on in Europe and so on and so forth, is priced into the price of natural gas for the moment. Right. Remember, we had these big swings. We went up to 9.5. We sold off all the way back down to 5.5. We rallied. And then the last pullback was a lot shallower. And now we're kind of sitting sideways here. If you've been watching nat gas. So it's going to be interesting to see longer term, still bullish. Fundamentals are still strong on nat gas. But, here in the States, as you know, we are awash still with nat gas. What's driving the price of nat gas higher is the perceived, slack that we could take up in the European, which is the opposite. Again, Russia controls pretty much all their nat gas. Let's see. Bill, yeah, no, that's pretty well known, Bill. Yep. Yeah, that's pretty well known. I mean, that's everybody kind of knows that. Yep. Remember, Bill, markets always price what is already known. So don't get caught up in that. Remember that prices, that all markets are forward looking. And so that is pretty well known. And that's why I'm trying to make the point that that $10 nat gas is already priced in. Does that make sense, Bill? Right? So if things would have to get a lot worse, if you will, in other words, Russia would basically have to cut off. And again, just quick reminder, again, it's way out in the future, but December 5, that's going to be a very critical date. I don't know if you guys, Bill, do you know what December 5 is? Yep. again, just I keep mentioning it, but it's so far in the future. Who knows? But that's actually when Europe has to decide whether they want to embargo Russian oil and so forth. So leading into that could be very interesting. Okay. Yeah, and then the grain markets. Again, we're long wheat. I think I mentioned that 8.5. If we can break out above that, that's another bubbling under the surface inflationary kind of trend. You look at soybeans, you look at corn. Corn also been so grains. We got drought conditions all over the place. So on a long-term basis, looks like the grain markets want to go higher. There are some levels. I am long wheat right now, and was long soybeans. We were up a little bit on that, but as you see, soybeans have just been all over the place. So we broke even on that trade, and I'm trying to get long some other, corn and soybeans at lower levels as well. Okay. All right, everybody. I'm gonna sign off. Thank you for joining me. And just a couple plugs here. I got the class coming on Thursday. There's a link below. Also, check me on Twitter. You can sign up there, or you can get onto the website and sign up for the class there. Sign up for the newsletter. Give me some thumbs up. Join the channel. And also, if you want to take advantage of the 5 free sessions, also there's the link below. Just talk to my support. Say I want to sign up. I also have a few people already taking advantage of that. So if you want to. It's free. All of it is free. Okay. So I'll see you guys on Friday. Again, non-farm payrolls. That's the big one this week. Okay. So be careful. You know what to do. That's going to be the big one coming on Friday. Non-farm payrolls. I think that could be another kind of, Jackson Hole speech type of move into the holiday. And we do have a holiday after that. So that'll basically bring back all the volume. That's the other thing. I'm looking forward to getting all the volume back after Labor Day. And we do have just before I leave, also a reminder, seasonally, we have a kind of a bullish slant for U.S. markets going into a U.S. holiday. Okay. So keep that in mind as well. Okay. All right, everybody. Have a great rest of your week. And I'll talk to you guys at the end of Friday. We'll be here Friday close to wrap up the week. Okay.